Good morning and welcome to this weekly analysis session, Monday the 15th of June. Hopefully you've all had a good weekend and your sporting team won. I had a good weekend. I was up in Brisbane with a team up there conducting the Trading Plan Plus workshop. We had some new people attend. We also had some re-attends as well. And so that was good to catch up with a few familiar faces and help out along the way. All right, just a reminder, with the Elite Traders Club and part of Elite Wealth, we are running a academy once again this year, coming up on the 28th of August through to the 2nd of September. There will be some further information coming out during the course of the next week or so, providing some further details about the exact content, who the speakers are going to be, the actual topics, but just a bit of a clue. We're going to have some material covering some FX strategies, so some brand new FX strategies that you won't have seen before. We're going to be running some sessions on trading psychology, on options as well. So for those of you who are wanting to add a little bit of premium to your portfolios, we'll be having a well-versed options trader discussing some strategies there and how you can take advantage of that. Obviously, we'll have Jeff Saffer there as well, presenting all good things fundamental. Myself, obviously helping out along the ETC side of things, together with Jeff running some combined fundamental and technical sessions. So do they mix? Can you mix them? And if so, and how? So we'll be going through that as well. So it'll be a fun time. Everybody gets to meet up with people before or make new friends if they haven't come along to any previous Elite Academies. You can also get to play golf up there at Century Cove, very nice golf course, boat cruises, all meals, accommodation inclusive. So if you're interested in that, just shoot us an email or get in contact with us and we'll let you know. Hopefully the weather's going to be as good as it appears on the screen there, and the company as well. There you go, a little bit of golfing. Looks very, very nice. I think golf was once described as a good walk ruined. The way I play golf, it certainly is. Our disclaimer for today: the content of this presentation or any further Elite Wealth or Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So before making an investing decision based upon the general advice presented in any of the following presentations, please consider whether it is appropriate in light of your financial circumstances. All right, let's get into things. Today we're going to go through and have a look at portfolio management. What's actually happened in the markets over the last few weeks, what's happening with our market risk at this point in time, its impact on your portfolios. We'll also be having a look at new trade setups along the way, both here and in the US, and then obviously some Q&A at the end. At the moment, those of you who are trading in Australia would certainly know that the market has come back a fair way since its highs in February time. Our market risk in the local market at the moment is still in high risk, meaning that we need to apply a 40% market risk multiplier to our maximum allowable drawdown. In the US, we've been chugging along for a while there in low risk and just recently have just tipped down into moderate risk. So therefore that means that rather than using a 100% market risk multiplier, which we do in a low risk market, we're now into moderate risk. We need to apply a 80% market risk multiplier. So what does that mean? Well, if you are splitting your capital between the two markets and you have a maximum allowable drawdown of 15%, then it means for your Australian portion of your portfolio, you are only allowed to have 3% of your maximum allowable drawdown exposed as risk in the market. Okay, so that's if you're splitting your portfolio. If you're not splitting your portfolio and you are investing just totally in Australia, then the amount that you are allowed is 40% of your 15. Now 40% of your 15 is going to bring you down to 6% value at risk. So only 6% of your allowable risk is to be exposed in the current market conditions. Now, I did run a session last week on Wednesday, education session, explaining market risk and what happens when the market risk indicator, our stochastic, moves below 60, and its propensity for the market to slip away quite quickly if we're not watching things. So keep your eyes on the market. I'm not saying that it will slip away quickly, but generally when we get down to this type of level, it can, and that's where we need to be vigilant. So that's the Australian market. Over in the US, as I said, we've just dipped down into moderate. So from that point of view, if you are splitting your portfolio, you are allowed to have a 6% of your total allowable maximum drawdown exposed as risk in the market. If you are solely invested in the US, then applying an 80% market risk multiplier to your maximum allowable drawdown will mean that you are now down to 12% from your 15%, which you would have had exposed during the low risk market. So they're just tightening the reins a little bit and keeping an eye on what's happening over there. But certainly the Australian market has had a bit of a downer over the last few weeks. All right, I think we might go through and have a look at some charts in a moment. For those of you who are still choosing to scale out along the way, obviously because we're in high risk market in the Australian on the Australian index, you're looking to take your profits at 1-to-1. Those of you who are choosing to scale out in the US, because we're in moderate market risk, then your objectives there are seeking 2-to-1. All right, let's bring up Beyond Charts and have a little bit of a look at the indices as we speak. So there we've got our S&P 1500. You can see pretty clearly that the market has really struggled since recently, just trying to get above all-time highs. We put in a few indecisive candles, and since then, over the last few weeks, the price action has certainly been to the downside. We did have a couple of strong days in the middle of last week, but finishing off the week not terribly strong at all, with a little bit of a pin bar there and then a down day on Friday. At the moment, you'll see that the stochastic has just dipped below our 80, and as a result, moving from a low risk market environment down into moderate risk as we speak. The Australian market, the XJO, the ASX 200 there, you can see from our really nice strong start to the year, putting on around about close to 10%, we've just about given that all back. We've dipped below 80, taking us initially into moderate risk, and then over the last few week and a half or so, market dipping down even further, pulling us down into high risk. And you can see the change here. We're now using a 40% market risk multiplier. Strong day on Thursday, a bit indecisive on Friday, given what happened in the US on the weekend. Don't expect too many bright things early on in this part of the week, but we'll just have to wait and see. Again, just make sure that you're keeping an eye on your value at risk. Very important. In terms of trade cancellations in the Australian market, there was one cancellation, and that was for Macquarie Group. Again, due to price action deteriorating. So we again keeping a reminder that we're looking for those higher troughs and higher peaks. And with Macquarie, we can have a look a little bit later on, starting to form a lower peak. So we had that with Macquarie. In the US, there were no trade cancellations. They're all still just pending at this point in time. In terms of trade setups across both markets this week, I managed to find one during the course of the weekend in the ASX, and I managed to find 8 in the US. Hopefully you guys have had a look and may have been able to find some more as well. So we'll get to those in due course. So let's go through and have a look at the Australian market to start with. So over the course of the weekend, running our Trading Plan Plus workshop, we were talking about simplified ways of managing your trades. So in terms of getting those longer trades that yield bigger returns that really do help with your expectancy and your overall portfolio returns, we were talking about trade management using our trailing stop methodology. So that's our 3 ATR green line there that you can see on the screen. I'll just take him off for the time being, just to clear up our chart. But on here you'll see, in terms of price action, our last trough just being formed very, very recently. Last week, putting in a high high and a high low. So our short-term downtrend turned around and became a short-term uptrend, meaning that we had a new trough formed. The new trough that's formed, is it at or above the second from last peak? Well, there's our last peak, there's our second from last peak, and quite clearly, on the basis of that, very, very close. And if you get out the value line and do the sums, you'll find that the low of this last trough is 1 cent higher than the high of our second from last peak. So according to our rules, if it's higher, that meets our price action filter. The only other thing that we need to do in terms of looking at this particular setup is just scroll out and see where we are in terms of if there's any levels of resistance or long-term peaks above. So if I zoom out, you'll see that we are in all-time highs, which is a good thing. And you have to ask yourself, how has this stock managed to get to all-time highs, particularly over the course of the last 3 or 4 weeks when the rest of our market has been falling? So certainly showing a very good relative strength. And if I pop that on the bottom of the chart there, you'll see that both over the short-term, medium-term and longer-term time frames, it's outperforming the benchmark index. So again, showing good relative strength. Is this going to continue into the future? Well, we'll just have to wait and see whether it does or not. Now that chart there has just gone back to a daily, so I need to pop that back onto a weekly. And you'll see that on the weekly basis, thinking about what's happened to our market over the course of the last few weeks, this stock is really starting to outperform, and you can see that in its price action as well. So let me just put my analyses back on there so you've got all the details. And I'll take the trailing stop out of the way. So the order for Aurizon Holdings Limited, AZJ, is an on-stop order at $5.39 with a limit up to $5.44. So as this is being recorded, you'll be able to come back to this later on if you haven't written that down. And your protective stop, at least 2 ATRs away from your entry and at least a minimum of 0.5% below the most recent trough. So using our 2 ATRs, we have to place our protective stop down at $5.92. So that was the only one I could find in the Australian market. We'll come back later on and have a look and see whether we've found any others collectively. Let's go and have a look in the US. So a number of opportunities over there over the course of the weekend, having a bit of a look through, and again, making sure that we've got really good, the strongest price action possible. So this particular one struck me, Bank of New York Mellon Corp. Mellon Corp, I don't know if it's any relation to Johnny Cougar. He's Mellencamp, isn't he? Anyway, there we go. We've got BK. If we have a look and see where it's been in its past, we can see that in recent history we do have some longer term peaks all the way back in 2000. That's back in the days of the dinosaurs basically. We also have some previous levels through 2008. So just coming into GFC territory prior to the big movements down, and it's a matter of whereabouts are our long-term peaks or any significant long-term troughs that this may well interact with. And when we're looking back over that particular time frame, the highest point between our medium-term uptrends and medium-term downtrends is a long-term peak. And they are significant because whatever has caused this has turned around a significant trend, a medium-term uptrend, a longer-term uptrend, and turned it completely around into a medium-term downtrend and a longer-term downtrend. They are very significant, so we must respect them. So in hindsight, seeing where there are some levels of resistance, it pays for us to think about that in terms of our trade structure. So if we go in and have a little bit of a closer look, you can see quite clearly that, if I'll just zoom out a little bit there, just zoomed a little bit too far, and there we go. So we've got our long-term peak in there, but certainly plenty of room up to that long-term peak. So if you're looking to trade that particular setup, the nice thing about this, lots of white candles through here. Again, thinking about this in terms of what the rest of the market is doing. Price action is really nice. Our last trough that's formed is well clear of our second from last peak. So exhibiting really, really strong price action. all we need to do is structure our trade accordingly. So this particular trade entry, we have an on-stop at $44.12 with a limit to $44.56. Our protective stop at least 2 ATRs away from our entry and at least 0.5% below our most recent trough. And using our ATRs, we need to have a protective stop down at 41.40. That's BK, Bank of New York Mellon Corp. Okay, next one's VC, Visteron Corp. Again, really nice price action. The last trough that's formed is certainly well clear of our second from last peak. So again, we just need to think about where is this stock in relation to its previous history. So if we zoom out, you'll see that we are in fact at all-time highs. So again, we just need to ask ourselves, how did it get to this particular level? Well, the market must like it. The market's pushing it up. And given what the market's been doing over recent times in the US, if we put on our relative strength, and I'll just put that back to a weekly chart, you'll see that for a long period of time in this nice upward movement, we had good relative strength, and then price started to stagnate and drift sideways for a period of time. During that course of time, we saw a little bit of underperformance on the short-term basis and a tiny little bit on the medium term, which is obviously to be expected when a stock's having a bit of a pullback, particularly if the market is still moving along quite strongly. Since then, however, some really nice price action of late, moving above our previous medium-term peak over here. So in terms of structuring this particular trade, if we go back to our analysis manager, back to our original analyses, then you will see the entry details there on the screen. Zoomed out a little bit too far again. There we go, on stop at $110.50 with a limit to $111.60. Our protective stop at least 0.5% below our last medium term trough and at least 2 ATRs, but no further than 4 ATRs from our entry. So our protective stop is at 103.26. That's VC, Visteron Corporation. Another stock here exhibiting lots of white candles, which is a good sign. Lots of white candles. If you have a look through recent history, not too many black candles. And again, consider what's happened with the broader market. So whereabouts is this stock in relation to its past? Again, all-time highs. So performing really, really nicely. And we'll just zoom in a little bit closer. Now, what you might notice on here at the moment is that our last candle in confirming the formation of a higher trough has actually passed our most recent medium-term peak. So the question we sometimes get asked is, well, how far is it allowed to go past that medium-term peak before it's gone too far? Okay. Now, it clearly makes sense in terms of hiding our protective stop to place our protective stop below our most recent trough. Now, on top of that, we've also got to include our 2 ATRs, which we're taking consideration of, so we're looking at volatility as well. So we make a rule, and our rule states that as long as the price hasn't moved greater than 1% above our previous medium-term peak, then we're still okay to enter the trade. Okay, so in this particular instance, 1% above our previous medium-term peak, we just managed to squeeze in. So what the way that we're entering this particular trade, we're entering 2 pips above the high of our last candle. So 2 pips above the high of the last candle has an entry at $100.89. Now, by the time we add our 1% limit to our initial entry, we have to have a limit which becomes $100.96. So there's a very small range, if you like. Typically our range is 1%, but because the last candle has already moved past our medium-term peak, it's nearly used up, if you like, that 1% leeway. But we've still got a narrow window in there between 108.89 and that one there should be 100.89 and 100.96. So I'll change that there now. I've just double clicked on that. There we go, David. You can see I've had a long weekend. 100.89. There we go. So on stop order, $100.89 with the limit to $100.96. Protective stop down at 96.21, below our most recent medium-term trough and certainly outside of 2 ATRs, that Sirona Dental Systems, SIRO. Next one on the list, Pinnacle Entertainment. It's obviously had a strong move through here, some sort of news that the market obviously liked, drifting sideways for a period of time. Very, very strong recently. It's had a retracement. It's now last week putting in a bullish candle and forming or confirming for us the formation of a higher trough, well clear of any previous price action. So some very positive news through here. It's having a shallow retracement, and if price can get back above its previous medium-term peak, then we certainly have an opportunity for further upside. Where's it been in the past? Well, you can see there that we're at all-time highs, which is a good thing. Obviously, being very, very strong of recent times, great relative strength, and if it can move past that previous medium-term peak, then we're well on our way. So in setting of our orders, we have an on-stop order at $40.44. It's 2 pips above our previous medium-term peak, with a limit to $40.84. That's 1% above our entry level. A protective stop, 0.5% below our last medium-term trough and outside of our 2 ATRs, has a protective stop at $35.72. That's PNK. Next one, Log MELN, Logmeln. Not too sure what these guys do. Again, in terms of price action of recent times on this particular stock, lots of nice white candles, so really good strength throughout, good relative strength, otherwise it wouldn't come up on the scan in the first place. Where has it been in its past? All-time highs. So again, showing a lot of strength. The market obviously likes this stock. It's not allowing the stock in more recent times, whenever the price is extended and coming back, the market is jumping out of its skin to get back in, to accumulate this particular stock. So certainly showing very, very strong price action, which is what we're wanting. So in terms of structuring our trade, order entry 2 pips above our medium-term peak. So we have an on-stop order at $70.03 with a limit to $70.72. Protective stop at least 0.5% below our most recent trough and outside of our 2 ATRs, has our protective stop at 62.33. That's LOGM. Next one on the list, Kaiser Aluminium Corp, KALU. Showing again some really nice strong white candles throughout. Just recently having a little bit of a retracement. Last candle certainly confirming for us that we are now in short-term uptrend, and even the candle before that as well. Nice bullish candle last week. All we need to do is clear our medium-term peak and make sure that we are protecting our bottom line, so always using a protective stop. Again, where has this stock been to in its past? Now, what we need to think about is 2007, all the way back here, whether this point, shortly after its birth, if you like, after its listing, whether that's going to come into play for your trade. So we need to think about that. We're getting close to those levels. And in terms of risk to reward, we're not quite there. It's one that's looking really good. We're in that gap between $80 and $100. It's just a matter of whether or not that long-term peak way back in 2007, at the beginning of 2007, is going to come into play. Certainly, at this particular level, there will undoubtedly be people who still own this stock. And along the way, on its way up, any supply that people had from all those years ago, it's been churning through that. Very, very strong of recent times. It's just a matter of whether it's got the energy to go past that next particular level. So one there to have a bit of a look at. In terms of risk to reward, doesn't quite fit the paradigm that we're looking for, but that's a long time ago in history, so I'll leave you to make that particular decision. Long-term peaks, we do need to respect them. If you are interested in that particular trade, it is getting close to 1-to-1, depending on how aggressive you want to be. On stop at 84.52 with a limit to 85.22. Protective stop down at 78.44. That's Kaiser Aluminium. Next one, AYI. We've already got a position in this. Moving along very, very nicely. It has set up again. So another opportunity for us to, if you haven't got this one already, to take a position. Or if you wanted to add to a position, you could also do that as well. In terms of price action, the last trough that's been formed is still well above our second from last peak, so obviously exhibiting the strongest of price action. In many instances, we'll see that the last trough is sometimes below the second from last peak. When you compare that, when you get the formation of a trough clearly above the second from last peak, it's clear which one's exhibiting the strongest of price action. So that's the way that we're making our decisions. In terms of this, all we've got to do in the structure of the trade is wait for a break of our last medium-term peak and put in our protective stop, 0.5% below our most recent medium-term trough and outside of 2 ATRs. So AYI, Acuity Brands, on stop at 183.57 with a limit to 185.40. Protective stop, if you don't already have this one, at 170.25. That's AYI. AVY, Avery Dennison Corporation. There is a long-term peak, which I've drawn in on this one, coming up towards the $70 level. So we'll zoom out and see where that is. It's all the way back through here. There is a long-term peak at the top in the middle here. There's a long-term peak up here, but there is also a long-term peak at this level here where we have a medium-term uptrend and then a medium-term downtrend on the other side. So that's our most recent long-term peak that we need to refer to. So we need to respect that into the future. That long-term peak is at $69.04. So is that likely to impact on our trade setup? Well, let's go through and have a look. In terms of risk to reward, we certainly do have a minimum of 1-to-1 up to that old longer-term peak back in GFC terms. So certainly meets the criteria of at least 1-to-1. All we need to do in terms of price action, really strong price action, last trough well clear of any form of price action, well clear of the second from last peak. So to structure this trade, an on-stop order, 2 pips above our most recent medium-term peak, has an on-stop order at $63.43 with a limit to $64.07 and a protective stop at $59.38. That's Avery Dennison Corp, AVY. And I think we're at the end of our list, so I'm going to hand it over to you guys. And let me know what you found out with your scans, etc. over the course of the weekend, or if you've got any trade setups that you would like to discuss. Activision, says William. ATVI. All right, let's go and have a look. ATVI. There we go. Come on, Beyond Charts. There we go. So let's have a bit of a look. Let's zoom in a little bit. Let's put on our swing chart. It's always handy to put on the swing chart, helping us to highlight those peaks and troughs. Yeah, look, I can see absolutely what you're looking at there, William. In terms of where's it been in the past, it's all-time highs, so really, really good. How did it get there? It's obviously well liked by the markets, so that's a very positive thing. Our price action, at the moment, we haven't yet had the confirmation that we've had a trough formed. So what I'm waiting for, and this is one that I looked at over the course of the weekend, is just the confirmation that this last candle is going to be the candle that formed the trough. So for the time being, we're in short-term downtrend. This candle's not a bullish candle by any stretch of the imagination. So just waiting for the price action to turn around and start moving to the upward side. And then quite clearly, if we get that, then if this is the trough, if this is the low, the lowest point between our short-term downtrend and what will be a new short-term uptrend, i.e. a medium-term trough, that medium-term trough will certainly be well clear of any other price action and certainly well clear of its second from last peak. So you can certainly see what you're looking at there, William. In terms of ticking all the boxes, it doesn't at the moment. Just wanting to make sure that we've got the strongest of price action there. We're yet to see the formation of that trough. Certainly, if you're a little bit more aggressive in nature, you could trade off that. But again, being conservative and really just wanting to take breakout trades for the time being. All right. Let's have a look. Kim says, Reynolds has just completed a takeover of Lorillard and our open trades are in suspension. I understand that Lorillard shareholders will receive approximately $50 per share held and also some Reynolds shares. Do you know if CFD traders will receive the cash distribution? Interesting question there, Kim. What I will do, I'll get back to you on that one. I'll have some discussions with Jeff Saffer to see whether he knows anything about that. I'll do a little bit of research in the background as well to see what I can find out to see whether or not you're entitled to those distributions. I would have thought so, but again, I'll try and confirm that and come back to you. William, yes, I agreed, and we'll look at this one. Yep, no problems, William. That's fine. Any others, guys? Any other questions? Any setups? Just scrolling back through. Yep, okay. All right, well, look, if there's no more there, just a reminder, if you're interested in attending the Academy this year, just shoot us a note, give us a call, and book your place. We will be closing off final placements for that in the course of the next 10 days or so. Certainly, if you get in before the end of the financial year, I think you'll probably find that is also tax deductible. So hopefully we get some good weather up there this year. Have a little bit of fun, learn some new strategies, consolidate on what we've covered up to this point in time, and help you to become a better investor and better in trader. So that's it for me this particular week. We've got an education session on Wednesday afternoon and our macroeconomics analysis session on Friday afternoon. So until then, good trading. Keep an eye on your risk. Keep an eye on what the market risk is doing. Look for the strongest of strongest setups. And until then, we'll catch up with you next Monday morning at 9 a.m. Bye for now.